The notification pinged on my phone during Mom's impromptu Instagram live session, where she was showing off her latest Hermes bag to her 15,000 followers. "Just treating myself to a little luxury," she giggled into the camera, the $12,000 Birkin bag prominently displayed against her marble kitchen counter. "When you work hard, you deserve beautiful things." I watched from my corner office on the 47th floor of Goldman Sachs, where I'd been managing private wealth accounts for the past 5 years. The irony wasn't lost on me that Mom's hard work consisted entirely of managing her Instagram influence and spending money from credit lines I'd personally approved through her private banking relationship with our firm. What she didn't know was that I was the financial associate listed on her account statements. What she definitely didn't know was that I'd been quietly facilitating her lifestyle while listening to her mock my career choices for years. "My daughter works at some bank," I heard her tell her followers, dismissing me with a wave of her manicured hand. "Nothing exciting like my son Daniel's law practice. She just shuffles papers or something. I keep telling her to get a real career that matters." Daniel. Golden child Daniel, whose struggling personal injury practice I'd also been quietly supporting through favorable loan terms and credit arrangements. The same Daniel who drove a Tesla Model S financed through our automotive lending division, lived in a downtown condo with a mortgage I'd expedited, and maintained business credit lines that kept his failing practice afloat. My phone buzzed with a family group text from Daniel himself. "Mom's killing it on social media. Meanwhile, my little sister is still playing banker. When are you going to do something important with your life, Emma?" I almost laughed. Important. If only they knew that their paper-shuffling sister managed $2.3 billion in private client assets, including trust funds for 3 Fortune 500 CEOs, investment portfolios for 2 Supreme Court justices, and wealth management for a dozen Hollywood producers. My corner office overlooked Central Park. My annual bonus exceeded most people's lifetime earnings, and my client list read like a who's who of American power. But to my family, I was just Emma the bank employee, overshadowed by Daniel's flashy law degree and Mom's social media presence. The family dynamic had crystallized perfectly at last month's charity gala. Mom had insisted I attend, presumably to network with successful people who might offer me a real opportunity. She'd introduced me to everyone as my daughter who works at a bank, while spending 5 minutes describing Daniel's legal victories and her own entrepreneurial journey as an lifestyle influencer. What none of those charity guests knew was that I'd personally managed the investment portfolios for 3 people at our dinner table, had arranged private placement investments for the hospital board chairman, and had facilitated the merger financing for the pharmaceutical company whose CEO was sitting 2 seats away. But I'd smiled politely, answered deflecting questions about whether I was just a teller, and listened to Mom promise everyone that she was working on getting Emma into something more ambitious. The monthly family brunch had become a ritual of financial humiliation. Daniel would arrive in his Tesla, describing his latest case with theatrical flair. Mom would display her newest luxury purchases, each one funded by credit arrangements she assumed came from good banking relationships, rather than her daughter's professional intervention. Meanwhile, I'd sit quietly, cutting my eggs Benedict while they discussed my lack of direction and ambition. "Emma's sweet," Mom would tell her friends over mimosas, "but she's not really the ambitious type." Thank goodness Daniel got the drive in this family. The drive. I'd closed a $450 million private equity deal the day before that brunch, facilitating the acquisition that would create 3,000 new jobs across 4 states. But discussing my actual work would violate client confidentiality agreements, so I nodded along while Mom worried about my limited potential. Now, watching her Instagram live session from my Goldman Sachs office, I realized the charade had gone far enough. Mom's credit utilization had reached 98% of her available lines, Daniel's business loans were 30 days past due, and their combined debt service exceeded their actual income by a factor of 6. They'd built their entire lifestyle on credit arrangements I'd been quietly managing, all while publicly dismissing the career that made their luxury possible. I opened Mom's private banking profile and began reviewing her account privileges. Her primary credit line was scheduled for annual renewal on Tuesday. Some renewals were automatic. Others required executive approval. This one was going to require a very special review process. Build up. 760 words. Monday morning brought the usual cascade of family social media updates. Mom's Instagram stories featured her Monday yoga class at an exclusive studio, followed by lunch at a Michelin-starred restaurant downtown. The bill, I knew from experience, would hit her platinum credit card, the one with the $50,000 limit I'd personally approved last year. Daniel posted photos from his weekend at the Hamptons house he'd rented using his business credit line, hashtagging #LegalLifestyle and #success. The irony burned as I reviewed his account status. 3 months behind on his practice's operating loan, maxed out on his personal credit cards, and maintaining his professional image entirely through debt financing I'd arranged. My phone rang with Mom's weekly check-in call, her voice bright with patronizing concern. "Emma, sweetheart, I was talking to Mrs. Patterson about her son Michael. He just got promoted to senior analyst at some investment firm. Maybe you should reach out to him about opportunities? You can't just stay at that bank forever." "What bank do you think I work at, Mom?" I asked, genuinely curious about her understanding of my career. "Oh, one of those regular banks. Chase or Bank of America or something. The point is, you need to think bigger. Daniel was saying you should consider law school. Late 20s isn't too old to start over." I pulled up her account while she talked, noting the weekend's charges. $3,200 at Bergdorf Goodman, $1,800 for the yoga retreat, $950 for dinner at Le Bernardin. All funded through the private banking relationship she thought came from excellent credit, rather than family connections. "Speaking of thinking bigger," I said carefully, "how's your cash flow looking these days? I noticed you've been using credit quite extensively." Her laugh was dismissive. "Oh honey, that's not how wealthy people think about money. When you have good relationships with the right banks, credit isn't debt, it's liquidity management. You'll understand when you get into real finance instead of just whatever it is you do all day." Real finance. I almost choked on my coffee. While she'd been building her Instagram empire, I'd been structuring leveraged buyouts, managing sovereign wealth fund investments, and facilitating merger deals worth more than most small countries' GDP. But to her, I was still the daughter who needed career advice from other people's children. The family group chat lit up with Daniel's latest achievement, a $25,000 settlement in a slip-and-fall case. Mom's response was immediate. "So proud. This is what success looks like. Emma, are you taking notes?" Face blowing a kiss. I was taking notes, actually. Notes about how Daniel's business expenses exceeded his revenue by 40%, how his client trust account showed concerning irregularities, and how his partnership agreement contained clauses that would make any real lawyer cringe. Tuesday's executive committee meeting included routine reviews of high-risk private banking relationships. Mom's file appeared on my screen as a standard credit line renewal requiring senior approval. The account showed excellent payment history, because I'd been managing the minimum payments through automated systems, but concerning debt-to-income ratios and no actual revenue sources beyond social media endorsements. My colleague Jennifer Phillips, Senior Vice President of Risk Management, raised an eyebrow at the account details. "This client has $180,000 in active credit across multiple products with declared annual income of $65,000? How did this get approved initially?" "Family banking relationship," I said smoothly. "The account has strong payment history and significant social media influence that translates to earning potential." "Social media influence isn't collateral," Jennifer replied. "And these usage patterns suggest lifestyle maintenance rather than investment or business development. I'd recommend immediate credit line reduction and enhanced monitoring." Around the conference table, 6 senior executives nodded agreement. These were the same people who managed portfolios for tech billionaires and Hollywood moguls, who understood the difference between sustainable wealth and debt-funded appearances. Motion to approve credit line reduction to $25,000 across all products, effective immediately, Jennifer announced. Account to be transferred from private banking to standard retail relationships. The vote was unanimous. As the meeting ended, my phone buzzed with Mom's latest Instagram post. A photo of her and Daniel at another expensive restaurant, captioned "Family dinner with my successful son. So grateful for the beautiful life we've built together. 2 hearts #blessed #success #family first." The beautiful life they'd built on credit arrangements I'd been facilitating while they publicly dismissed my competence. I signed the credit modification paperwork and scheduled the account changes for immediate implementation. Mom's call would come Thursday morning, after her card got declined during her weekly shopping trip to Saks Fifth Avenue. By then I'd be ready to have a very different conversation about careers, success, and exactly who'd been managing the beautiful life she'd been showcasing to the world. Thursday arrived with the precision of a Swiss watch. At exactly 10:47 a.m., my office phone rang with Mom's number, just as her credit card would have been declined at Saks Fifth Avenue's designer shoe department. Emma. Her voice carried a note of panic barely contained beneath forced cheerfulness. There's been some terrible mistake with my credit cards. They're saying my accounts have been suspended? I need you to call your bank friends and fix this immediately. Actually, Mom, let me conference in someone who can help explain this better. I dialed Jennifer Phillips' direct line, putting the call on speaker in my corner office overlooking Central Park. Jennifer Phillips, Senior Vice President of Risk Management, Goldman Sachs Private Banking. The silence on Mom's end was deafening. Jennifer, I have my mother on the line regarding her account modifications. Could you walk her through the changes we implemented this week? Of course, Emma. Mrs. Morrison, your private banking relationship has been terminated due to unsustainable debt-to-income ratios and misrepresentation of earnings capacity. Your credit lines have been reduced from $180,000 to $25,000 total, effective immediately. What? Goldman Sachs? Emma, what is this woman talking about? Jennifer's voice remained professionally neutral. Mrs. Morrison, your daughter Emma is Senior Vice President of Private Wealth Management here at Goldman Sachs. She's been managing your account relationship for the past 3 years under our family banking protocols. I watched Mom's reflection in my office window as the reality hit. Behind me, my wall displayed my MBA from Wharton, my Series 7 and 66 licenses, and a photo of me shaking hands with Treasury Secretary Williams at last year's Financial Regulation Summit. Emma. Senior Vice President? At Goldman Sachs. That's correct, I said calmly. The same Goldman Sachs where I've been working for 5 years while you told everyone I shuffle papers at some bank. The same career you've been advising me to abandon for something more important. My other line rang, Daniel's number. I had Jennifer add him to the conference call. Emma, what the hell is happening? My business credit line just got called in full and they're saying something about Goldman Sachs? I thought you worked at like a community bank or something. Daniel, this is Jennifer Phillips from Goldman Sachs. Your sister has been facilitating your business credit arrangements through our commercial lending division. Due to irregularities in your trust account management and failure to meet lending criteria, we're exercising our right to immediate repayment of your $340,000 in outstanding business loans. The silence stretched across 3 phone lines while my family processed the magnitude of their misunderstanding. But Emma, Mom's voice was small now, stripped of its usual confidence. You never said. We thought you were just. You thought I was a failure, I finished. You spent years introducing me as your daughter who works at a bank, while showcasing Daniel's struggling law practice. Meanwhile, I managed $2.3 billion in client assets, including the portfolios of people you follow on social media. Daniel found his voice. 2.3 billion? The people whose lifestyles you've been copying? I manage their money. The charity galas you attend? I arrange the investment strategies that fund them. The luxury brands you showcase on Instagram? I structure the financing that keeps their retail operations profitable. Jennifer's voice cut through their shock. Both accounts are scheduled for immediate closure unless full payment arrangements are made by 5 p.m. today. Mom's Instagram Live audience was about to witness a very different kind of lifestyle content. The beautiful life they'd built on my professional expertise was about to become a very public lesson in financial reality. 8 weeks later, I sat in my newly renovated office. Goldman Sachs had promoted me to managing director after my successful restructuring of 3 major client portfolios, watching Mom's final Instagram Live session. Her follower count had dropped from 15,000 to 847. The Hermes bags had been sold on consignment, the marble kitchen counter replaced with laminate in her new studio apartment. She was explaining to her remaining followers why she'd be taking a break from social media to focus on personal growth. Daniel's legal practice had collapsed entirely. The trust account irregularities I'd discovered triggered a state bar investigation, resulting in his license suspension and criminal fraud charges. His Tesla had been repossessed, his downtown condo foreclosed, and his social media accounts deleted in shame. Mom had found work as a retail associate at Nordstrom, ironic, considering she'd spent years shopping there with credit I'd arranged. She'd called once, 3 weeks after her accounts closed, to apologize and ask if we could work something out as family. I'd explained that Goldman Sachs didn't extend credit based on family relationships, only financial qualifications. Professional boundaries existed for good reason. The extended family had quietly distanced themselves after the story spread through their social circles. Uncle Robert stopped inviting us to his holiday parties. Cousin Jessica's wedding invitation had somehow gotten lost in the mail. The family friends who'd pitted my limited career prospects suddenly remembered they barely knew us. My actual career had flourished beyond their comprehension. The Morrison Family Trust, my personal investment vehicle, had grown to $12.7 million. My client list now included 2 tech billionaires, a former Secretary of State, and the investment arm of the Vatican. I'd purchased a penthouse overlooking Central Park, drove a Bentley Bentayga, and maintained membership in 3 exclusive country clubs. Real success, built on actual competence rather than borrowed luxury. Sometimes I missed having a family that understood my achievements. But I didn't miss being invisible to people who should have recognized my worth. Mom's credit line had ended on Tuesday just as I'd promised. Her dismissal of my career had ended along with it. The Morrison family's beautiful life had been revealed as exactly what I'd always known it was, a house of cards built on credit arrangements from the daughter they'd never bothered to truly see. Professional boundaries had been restored. Financial reality had been served. And I was finally free to succeed without subsidizing their delusions.